Welcome to this presentation on FEMA compliance on foreign investment in India. Today, we'll cover how FEMA regulates FDI, external commercial borrowings, and the key compliance requirements for foreign investors. The Foreign Exchange Management Act of FEMA 1999 governs foreign investment and borrowing in India. The key regulations are the Non-Debt Instrument Rules of 2019 and the Master Directions on ECBs, trade credits, and structured obligations. Non-compliance can lead to severe penalties, making FEMA compliance crucial for all investors. Foreign investors are allowed to invest in a reputable basis in Indian companies, whether public or private limited, and also in limited liability partnerships. Together, these are termed Indian entities under FEMA rules. All investments must be routed strictly through authorized banking channels. FEMA does not permit the use of wallets or third-party platforms for foreign investment transactions. Foreign direct investment in India can be made through two routes. The automatic route, which does not require prior government approval, applies to sectors such as software or greenfield airports. The government route requires the approval in sectors like print media or multi-brand retail. Some sectors also have sectoral thresholds. For example, defense and satellites allow up to 74% under the automatic route, while higher investment requires approval. When foreign investors acquire shares or instruments, the pricing must follow RBI norms. Valuation for unlisted companies must be done by a SEBI category, one merchant banker or a chartered accountant. Once funds are received, shares or instruments must be allotted within 60 days. If not allotted, the money has to be refunded within 50 days. Reporting is mandatory, with Form FC-GPR or LLP 1 for fresh issues and Form FC-TRS or LLP 2 for transfer transactions. Foreign investors may also invest through convertible notes in DPIIT recognized startups. These require filing for Form CN within RBI's timelines. Additionally, all Indian entities with foreign investment must file an annual foreign liabilities and assets return. When an Indian resident borrows from a non-resident, it is classified as an external commercial borrowing. The maximum ECB limit is $750 million per entity per financial year. RBI mandates a minimum average maturity period during which the loan cannot be repaid. ECB proceeds cannot be used for real estate, equity purchases, or capital markets. Reporting is also mandatory. Borrowers must file Form ECB before obtaining the loan and Form ECB 2 on a monthly basis. Failure to comply with FEMA regulations can lead to heavy penalties. These include fines up to 3 times the amount involved, daily penalties of 5,000 rupees for continuing violations, and in serious cases, enforcement actions by the RBI or the Enforcement Directorate. At Femabide Advisorz, we simplify FEMA compliance for businesses and investors. With FEMA consultants in Hyderabad, Bangalore, and Andhra Pradesh, we provide end-to-end support from structuring foreign direct investments to reporting and RBI approvals. Trusted by businesses across sectors, we ensure your expansion into India is smooth and fully compliant.